Good morning, traders. It is Monday, December 21st. It's more than 2 hours before the open. I want to do a video. I want to get it out before the open so that you can take action on it. I'm not going to do pre-open market comments. I'm going to do a video instead today. Last night I recorded a video. I'd mentioned to you that the market was looking a little heavy. I was expecting a little bit of selling today. Nothing overly dramatic. Well, that's not true. We had news that came out overnight. There's a new strain of the virus in the UK. Everything is shut down there. Everyone's feeling that the vaccinations that are just hitting the market right now are going to take most of the quarter to actually start bearing some results until things can start opening up. That means that the economic recovery is going to take longer. Right now, stocks are priced at a PE of 40. That is extraordinarily rich. Is the decline Monday morning due to this new strain of the virus, or is it profit taking? As I mentioned in last night's video, I saw the news of the stimulus bill, the $900 billion long awaited stimulus bill was finally passed by Congress. Fantastic news. Great. Market should be up on that news, right? Well, the futures were only up about 3 points initially, and then they were down 3 or 4 points when I recorded last night. So a very muted reaction. That tells me that this stimulus bill, it is priced into the market. There was also a budget extension of 24 hours. Congress needs to get in and extend the budget to avoid a government shutdown. Now, that's going to happen. They're going to extend it, but it just tells you that there are a lot of issues right now that are unresolved. And everything that could possibly happen in a positive way is priced into the market. Overly optimistic. So let's take a look at the market technically. You can see I had mentioned yesterday, first dip. Usually there's going to be a second dip and a retest. This is where the futures are indicated to open this morning, down 60 points. When that happens, this upward sloping trend line that we've been leaning on, that will be breached. That is a technical breakdown. If the market comes down to the low that you can see happened overnight, that puts us at really a major technical support level of 360. If that fails, we could see additional selling on the backside. So I hate to put a lump of coal in your stockings, but the market does not look good. We are not going to stick our head in the noose. Last night I showed you a trade. We are not going to do that trade. So these are our open positions. Let's take a look at what we've got. This was the trade that I highlighted last night, December 20th. It was to sell the Adobe January 8th expiration, selling the 475 put, buying the 472.50 put, doing that for a 50-cent credit. Cancel that order. We don't want to do it. You can see two other orders that we were not able to get filled on last week. It was Adobe, the December 31st put spread, and CRSR, the January 15th 30-25 bullish put spread. We weren't able to get filled on that. I had already mentioned to you that if we weren't filled on those by the close Friday, to cancel those orders, so you already should have done that. Last week, these are the trades that expired worthless, meaning we made the maximum amount of profit on these trades. TME expired worthless. We sold the $18 puts for 30 cents. That was a really nice one, only a week and a half long trade. NVIDIA, Etsy, Cisco, Hilton, all of those bullish put spreads expired. We made 25% return on each one of those. KNDI, the December 18th $8 puts, those expired worthless. We sold those for even better than 60 cents. That was a super nice 35% return on that naked put right. The point being, we just reduced a lot of risk, and that is exactly what we had planned on. We wanted to have a lot of these positions expire worthless. That's the beauty of selling options inside of a 3-week window, is that we have time decay constantly working in our favor. In fact, accelerated time decay. As those positions start to whittle away and whittle away, it's easier for us to manage them because we can buy them back for a profit, and we're able to constantly evaluate market conditions. With the market just kind of floating higher on very light volume, this is the perfect strategy for us. And now we've kind of wiped the slate clean. We've got 4 positions on. One of them is a problem. We're going to address that this morning. That is the Intel December 31st $49 put. We are going to be buying back our short leg this morning. We are not going to wait. We are going to buy that put back, market on open. So you should have that order working before the open this morning. We're going to buy it back at the market. Some pretty negative news that hit Intel. I'd mentioned it to you yesterday. Microsoft is going to be producing their own chipsets. They're no longer going to be needing Intel for that. This has been a very, very long relationship. Intel's going to have a tough time finding its footing, and we can see that in the chart from Friday. We'll put up the Intel chart. And there's your monster drop. You can see the stock will open about 95 cents lower today. This is going to impact the company for quite a while. Apple also announced about 6 months ago they are going to be producing their own chipset. So Intel has lost two of their largest customers. Not good. We can expect to see further selling in this stock as asset managers adjust. So we're going to buy back our short on Intel. There's another component to that spread. Now that's going to leave us long the 48.50 put. So you're also going to place, once you get your fill back on the $49 put, you're going to place a GTC order to sell the Intel December 31st 48.50 put. This is the one that we're long. And you're going to place that target at the same price that you paid for the $49 put. So let's say, for instance, that you buy the $49 put back, market on open, you get your fill back, the fill price is $2.50. You're going to turn right around and you're going to place an order to sell the Intel December 31st 48.50 put for $2.50, exactly the same price. If we're able to do that, we'll still make our dime on the trade. I think that the stock is going to continue to drift lower. We've got 2 weeks for that to play out, albeit 2 very short weeks. This is a 3.5-day trading week. So holiday shortened, probably going to see some light volume. We'll see some excitement this morning and a pullback. You're going to hear that this market pullback today is all related to this new strain of the coronavirus. I would urge you to take a step backwards and really think about what's happening. It's not great news, certainly, but the bigger issue is that perfection, absolute perfection, is priced into the market with stocks trading at a PE of 40. That's why you're getting the market drop. You'll also see that into year end, there's seasonal strength. Market tends to float higher and higher into year end and close near its high, and that's also priced into the market. Look at the VXX. Now, this is what it's doing today. That's where it closed on Friday. Look at how low it is. When option implied volatilities drop to this level, this is a fear index. It shows how uncertain market conditions are. There is absolutely no fear. Fear is low. When do you get your biggest corrections? When do you get your biggest market drops? You get it when there's complacency, when nobody's looking for a market drop. So I feel that this decline could actually gain some momentum, bullish sentiment off the charts. That means that this is a time when we need to be careful. And you hear me preach this video after video after video. Market first, market first, market first. The market dictates everything in terms of our trading strategy. And right now, it's telling us, let's be super cautious. Now, we do have some positions on. I'll take a quick look at those. We've got Amazon, a little bit troubling for me. I didn't like the price action on Friday, but we do have the 100-day moving average that held Friday. You can see how we're poking just below it this morning. I don't like that. We may have to adjust our Amazon position, but I feel that Amazon is going to have an absolutely gangbuster season. Everything that I'm reading, FedEx, UPS, Amazon, package shipments this holiday are setting record levels. I think Amazon's going to do very well during the holiday. You can also see that it has not rallied in a very big way. So I don't feel that it has that much to give back like some of the stocks that have gone parabolic. So this is our support level right in here. We need to get through this week. If we can do so, position will be very easy for us to manage the following week. ZS made a huge run. You can see how it's strong. It wants to continue to move higher. Even with the market pullback, it's still able to hold the low from Friday. This stock wants to go, and we're all the way down here with that bullish put spread that's going to expire in 3.5 days. No issue there. RKT is our other position. This is going to hold strong. Mortgages, super, super strong with interest rates near historic lows. We're way down here on this support level. That also has 3.5 days left until expiration. So ZS and RKT expire this Thursday, which is a half day of trading. Not worried about that at all. Intel, we're adjusting. We're buying back our $49 put. That's going to give us intraday some bearish bias. Not a lot because we've got our target out there. Amazon would be the only other trade that we need to worry about, and I'm not overly concerned about it right now because the stock is near a major support level. Quick look at some of the stocks that I highlighted yesterday. If you're a day trader, market puts in an early low, double bottom higher low, things seem to be firming up. Here are some stocks that you can look at. These are the ones that I highlighted yesterday. I really like Adobe. I think that bounced nicely up that 100-day moving average. You've got a downward sloping trend line that's been broken to the upside. Good reaction to earnings, but you can see it's going to be challenging the low from Friday. So be careful. Everything. APPS, super strong. Love that breakout there. VUZI, super strong. Any pullback, you're probably going to get a little bit of a bounce intraday. So I'm talking about day trading here. I'm not talking about establishing longer term positions. That we will only know once we're able to see the selling today and tomorrow. We want to see if that major uptrend in the SPY is breached. How much farther will the market come in? ZS also very strong. DE looked good. It was poking through this horizontal resistance. That's one to watch. CRWD, beautiful breakout here. These are all stocks that you want to have on your radar so that if the market pulls in, sets a low, these will be stocks that will float higher. They've got really, really good strength right now. So be very, very careful going into year end. If you're a long-term investor, you're going to be fine. We are short-term traders. We're very, very leveraged in what we do. So the market is extremely important to us. I see it coming in right now. I'd like to see a really nice drop on the SPY that will set up an excellent buying opportunity for us, but that could come all the way down at the 100-day moving average. We could see a nice round of selling given the bullish sentiment that's out there, given the coronavirus news, given the current valuations at a PE of 40. So we're looking at support levels around the 260 level. That'd be a major support level. We've got the 50-day moving average coming in at 354. Let's call it 355. And then we've got the 100-day moving average coming in at around 348. Those will be key levels to watch over the course of the next week or so. Hang in there. Let's see what the selling pressure looks like today. I'll keep doing these videos. I'll keep you apprised of what's going on with the market. If you'd like to have my pre-open market comments each day, in the description below this video, I've got my link to my Twitter feed. You're able to follow me there. That way each day before the market opens, you'll know exactly what my bias is. Thanks so much. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.